So moving along, so we've gone through land, we've gone through building. Let's talk about very briefly about equipment. There's no surprises here. So when we talk about equipment, we're talking about assets that are used in operations. So I write here not from their resale value, because sometimes you sell assets at a gain or at a loss, but that's not specifically why you have that asset. You don't buy it to sell it. If you bought something to sell it, what would it be called? Inventory, okay? So this, again, you want to make sure you can always distinguish between what you buy to operate and what you buy to resell, okay? You might end up selling equipment or selling a building or selling land at a gain or loss, but that's not its intended purpose. You didn't buy it just to sell it. So the cost includes all expenditures necessary to get the asset ready for use. You see a pattern here? Okay, with all of these assets, it's anything that gets it ready for its intended use, plus all these closing costs, minus salvage value for items related, that you're able to get money back from stuff within that property. So this can include taxes, transportation, installation, testing, trial runs, reconditioning. And if you get any discounts on that, it would reduce the cost. Yes?
So if you have a large piece of equipment that has to be assembled, would you add costs of labor to the
Yes. Well, and it's funny, we're going to talk a bit about direct labor, yes, for sure. Okay, direct labor, direct materials. And then there's the allocation of overhead, right? And when you take cost accounting, you'll learn about that. But yes, absolutely, those costs would figure into getting it ready for its intended use. It's not always easy to allocate these indirect costs, this overhead, which is, like I said, what we're going to be talking about a little bit further, down the line in this chapter. Okay, but yes, you do incorporate that. Okay. So sometimes when we purchase property, we purchase land, building, equipment, we make improvements. Sometimes we do this for cash, and sometimes we do this in some way that we exchange one thing for another thing, okay? We exchange something for our property rather than cash, other than cash. So can anyone think of something what you might exchange other than cash? Stock is a great example, right? So sometimes small companies, when they start up, they don't have anything to offer but stock. So they'll want to buy something and in exchange give stock, okay? Something else you might exchange. Any ideas? Debt could be something. Well, if you would incur debt, right? You could take out loans, right? I'm thinking of something even more basic. Just other assets, yeah. You can say, I'll sell you some of the inventory that I have on hand if you sell me this piece of equipment that I need. Okay, you may have something that they want, they may have something that you want. Okay, so some companies will exchange assets, some companies will exchange